What's up, everybody? Michael Silva here to do some technical analysis on the S&P 500. We are looking at the SPX, which is the S&P 500 index. We're going to look at the daily time frame and the 30-minute time frame. We're going to look at support, resistance, and then kind of follow up on the video that we talked about yesterday. Let's get into it. Welcome back to the daily time frame here, looking at the S&P 500, and we need to make some changes on today's weekly close. What do I mean as far as changes go? Well, this green rectangle here and this red rectangle here are areas of resistance and areas of support, and at this point in time I'm ready to change them because it looks like the bulls are making momentum to the upside and the bears are getting pushed back a little bit more. So what are we going to do here? Well, it's not going to be a dramatic change, but what we're going to do, as you can see, they're in their bear camp right now. We're going to go ahead and say that they're retracing back up into this area, which is just to about the market high. Now you can technically have it a little bit lower because there was this kind of gap right here that took place, and when you close the gap, that area will act as an area of resistance as well. But for illustrative purposes, I'm just going to make right up here, that is going to be the bears camp. As far as the bulls camp go, small adjustment. I think 3,000 is kind of acting as a floor for the bulls at this particular point in time. So we are going to make that the bottom, and we're going to move this up to here, which is 3080. Well, that will be the new entrance to the bulls camp, which is kind of meaning that this channel that it's been trading in is getting tighter and tighter. Now, as far as yesterday's video, I was mentioning that this candle, like, it looked like the market was wanting to pull back, which it did very shortly at the very beginning of the day. But one of the things that stood out to me, if we zoom in, is this daily candle right here. It obviously was having a really bad day throughout the day, but the bulls really stepped up at about 31.15 and really started moving the market up higher. And once we get into the 30-minute time frame, you're going to see how these price areas interacted intraday. Now, as far as this wedge goes, there's a couple things that we could technically do with it. One, we can repurpose it. It looks like it's kind of still could be potentially a rising wedge. I can't tell if I'm just trying to hold on to that, but if we do just repurpose it like that, that would technically still be a rising wedge, and maybe we just had the drawing, you know, incorrect to begin with. So it could potentially be like this, where we see more push up to the 3,200 and higher. So we can keep that there, or you can take note of it. Another little pattern that's kind of forming, right, is a bull flag right here, kind of a consolidation period, which we might see the break to higher. This price action, especially with today's close for the week, looks like the price is heading to that 3,200 level we've been kind of keeping an eye on. 3,200, if you can't see it, I'll draw the horizontal line across the screen. Boom, is right around there. If we can get above that and then into this bears camp, I think the price would easily want to go test that market high. I mean, there's so much bullish things going on right now. What really drove today's price action? There was news around a Gilead analysis indicating that it can reduce death. Now, we've known from history when there's positive news around the coronavirus, you typically see run-ups take place. So overall, very strong day today in the markets. The price is, the market closed at 31.85, and we were saying the 31.80 to 31.82 level there was an area of resistance. So this price looks like, I mean, it looks like it wants to pump up a little bit higher. Still, there's a lot of resistance up ahead. So we really just need to be prepared and watch both the bullish side of things and the bearish side of things. We need to look at ideals in both favors to come up with a good strategy and idea as to where we can place trades. As far as I see it, this is a more buy the dip, sell the rip type of market. You don't want to really go against this bullish momentum because there's quite a bit of it at this particular point in time. That doesn't mean that it can't change, but when you look at all the factors involved right now, for example, we have the strong support floor at 3,000. We have the price pushing higher into the island reversal pattern now. We had the golden crossover, which we mentioned a few days ago, and now the media, CNBC, and Bloomberg has started reporting on that, saying that the context could be changing to more bullish. And when there's more bullishness out there, it's something to take note of. Now, the higher the price action stays above these moving averages, the higher they move with the price action, and both the 50 and the 200 period moving average do act as support. And when the price action's below it, it acts as a resistance. So this is what the chart is going to look like going forward until further notice. I'm actually just going to move the bears candle just a little bit lower to the window, just because it looks a little bit more, it just looks nicer to me when they're about even size. So I'm just going to keep it down there, but that doesn't mean that the price can't go to the market top. It just looks better on this chart. So that is the bears camp. This green box is the bulls camp, which clearly has some nice ideals in its favor. And now this blue trend line, let's go ahead and just make that a little thicker because I want to just retouch up on that. That right there, if you scroll back into the history of the chart, is a longer term sign, well, longer term compared to what we've been looking at. It's still relatively short term. It's going back to June 2019. But as you can see, the pullback here, and then it kind of held through support all throughout this area. And then when we did have that start of the market crash, you see that the price came down and retested it as an area of resistance, and boom, it came all the way back up, right? And this acted as a huge resistance again. And the price today looks like it wants to start reaching higher, which we've been saying. You know, I don't see why it can't reach the 3,200 or the top of this island reversal pattern, especially after a day like today. In short, on the daily time frame, as I see it right now, we can clean up this entire chart and just look at the major areas of support and resistance. And those two areas would really, to me, be this 32, I mean, at the top of this pattern, I'm gonna just call it 3250 because it's just right above it, and it kind of makes sense to me. And then right here, which is the 3000. So we could see a bunch of ping-ponging back and forth, right? We might see it go like that, or we might just see it break out to test the new high. This could be a long process, but take note of that channel because it could be potentially a longer term channel. So let's go ahead and hop into the 30-minute time frame. All right, so we are here on the 30-minute time frame. This blue vertical line right here represents where the day started. I'm gonna go ahead and remove that from the chart, and we're gonna talk about how today's price action interacted with what we said yesterday with its support and resistance areas, and then we're gonna go ahead and map out new support and new resistance areas. There was a couple other levels in here, and I'll go over that. We talked about the 3150 level, and the 3150 level we kind of said like is the Bermuda Triangle of price action, where the price action kind of just doesn't know where to quite interact with the chart on it. And as you can see today, the price action right through the 3150 level, this area, notice the wicks from these candles all extended back and forth. So it was a fight between the bulls and the bears right through that 3150 level. So it acted as kind of like no man's land right there. And it also did it on the previous day there. So that kind of theory kind of held up. So I think I'm just gonna kind of ignore the 3150 level at this particular time because there's no clear area of support or resistance there. I mean, the price does struggle to get up, and then it back tests it, and then, you know, it kind of just floats around that range. But to clean up the chart, let's just go ahead and remove that. On yesterday's video, we said, hey, it looks like it's going to be basically a pullback, and I gave you reasons as to why. Those reasons were these long lower wicks right here, you can see started indicating that the market was going to push up, and we got that push up. And then I indicated out these two long upper wicks could be representing that the price might be getting toppy and pulling over. So we expected somewhat of a pullback. Well, this red candle here to start the day was the quote unquote pullback. We mapped out this 3140 area of support. And now I personally thought that if it closed below that area of support, yeah, we would have seen, I personally think at least, we would have seen a bigger downside to retest the bottom and potentially lower. But as you can see, the 3140 held today. This price basically came down to try to get down there, but then the bulls stepped in, but then the bears kind of came back over and said, no, we're going. And then it did get just a little bit below it, but this little wick right there that got below it, that lasted for about 4 or 5 minutes. So it was very, very short-lived. And then you can see it formed just a beautiful hammer candle. And that hammer candle is all we really need to know, stating like, hey, something's taking place right now. This held as support. I think that the price potentially is now moving up. And then the areas of resistance that we had next was 3160. And 3160, I mean, it kind of got held up there, right? We had this sort of a fake breakout there. And then the price acted as support support, 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 because once resistance is broken, it then becomes support. So in theory, that is going to be really an area of support now. So we got to change it from red to green. And after that point, it was clear sailing, just boom, 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 all the way up to the next area of resistance that it got above. That 3182, 3180 we were calling it, closed at 3185. So nothing but strength today on Friday to close out the week. Now it's our job to really kind of see where the resistance is moving forward. So we need to kind of zoom out, and as you can see, this is the island pattern over here. So what I'm going to do is, to get a clear picture of this, I want to go ahead and look at the hourly time frame to condense this chart a little bit so it's easier to see. The next area that we really got to keep an eye on is that nice round number of 3,200 right up there. I think that is going to be the main area of focus for me moving forward, and it could go as high as 3,250. So that area I'm going to go ahead and mark as red, the 3,200, because as you can see on this island reversal pattern, when we zoom in, as you can see, there's a lot of price action around this area. On the first run up, it kind of got rejected, and when it broke through, it came back to pull down to that area and then kind of bounced from there, and then it pulled back again, got rejected, but then moved again and then got rejected again. So I mean, it's kind of a zone, right? This whole island pattern reversal, there's no really clear indication on it. I mean, you could technically move it up a little bit higher, right? I just think it's easier to say 3,200 because it's a nice round number. So I'm just going to keep it at 3,200, but it does look like a lot of price chop right over there. It's like that 3,150 level, the Bermuda Triangle. This 3,200 kind of reminds me of 3,150 a little. So as for all the support and resistance areas heading into next week, we're going to keep 3,200 up here, and then I'm going to just kind of clean up the 3,140. The 3,140 level is obviously still an active area, but just for cleaning up purposes, I'm going to take it off. This 3,160 level, we can just keep it there, or just remind yourself 3,160 could be very active. But for just to clean up the chart, like I said, I like having things clean. We're going to be paying attention to 3,200, the bottom kind of trend line right here of this rising wedge that we adjusted. Overall, lots of bullish strength. The price closed above this 3182, which clearly was a very strong level of resistance. We mapped that out yesterday where we're like, it's taking steps down the staircase, but we could not get below this 3140 to make it bounce, and then bounce down. So yeah, it acted as support, and we saw the run up, positive news around the vaccine. This type of stuff happens. It is what it is. You need to be prepared for when things get bullish or when things get short. I had somebody reach out to me the other day and, said, hey, would this be a potentially good short opportunity? And when they ran me the trade through, it was around the 3150 level. I just had to say, no, it's not, because you need to make sure that your risk versus reward trades are more like 3-to-1 and not 1-to-1. If you're risking, $50 to make $50, it just doesn't make much sense, at least to me. If that's your style and your strategy, by all means stick to it. I'd rather be wrong, 60% of the time, but yet still be profitable. There was a time when I was starting trading, I remember I was wrong like 9 out of 10 times, but the one trade that actually went in my favor made up for all the 9 losses. So you can be very profitable even if you get trades incorrectly, and the way that you do that is through monitoring your risk and looking for high probability setups. A lot of people get that kind of confused where they're like, oh, he has a 90% win rate, he's right all the time. But the thing is, if somebody's right all the time, but their risk versus reward is all screwed up and they're wrong 1 out of those 10 times, right? That one time could blow up all of those 9 winning trades. That's just how it is. They say 90% of day traders fail. You got to look as to why that reason would potentially be. Most traders, they trade to get rich. They look at it as a lotto ticket. And that's really what the driving factor is when you look at like the blowing up of accounts in Robinhood. You see threads on Reddit like Wall Street's bets touting just huge $1 million wins and also huge losses. So it's looked at as gambling. It's looked at as a huge win. You need to look at this as a business and not as like one lotto ticket. If you want to be consistent for the long-term trading, especially an intraday trader, as a day trader or swing trader, you need to look for consistent profits, not gigantic wins. You need base hits over and over and over again because it's a long-term gain. It has to be a business, and businesses make reoccurring, consistent profits. That's what you need to do when it comes to trading. So don't just throw it all in just to have one big win, because once you get that big win, you're going to want that big win again. That's why they call those one-time big wins when you don't actually have a strategy. They call it fool's gold, because you think it's real gold. You think that you're getting all this money, but you don't realize the next thing in the psychology of your head of what's going to be taking place. Now I'm just ranting on. That's all I have for you today. Have a good day. Have a good weekend. Stay safe. Look for the weekly scan tomorrow. See ya.